What do an old shoebox, a country girl in Texas, a big insurance company, and millions of dollars have to do with an investment strategy?
Today on MoneyTrack, an investing lesson from a lady with a story you won't soon forget.
MoneyTrack is made possible by the Investor Protection Trust. The Investor Protection Trust is a nonprofit organization devoted to investor education. Over half of all Americans are now invested in the securities markets, making investor education and protection vitally important. Since 1993, the Investor Protection Trust has worked with states across the country to provide the independent, objective investor education needed by all Americans to make informed investment decisions.
This is MoneyTrack with Pam Kruger and Jack Gallagher. Bringing you real stories and real experts to show you what works and what doesn't work when it comes to investing your money. This is MoneyTrack.
Hi, everybody. I'm Pam Kruger.
And I'm Jack Gallagher. Our program is always about money, especially how to invest and protect it. By the way, you might like to know we're not sponsored or funded by any big brokerage firms or, for that matter, any small financial companies.
You know, on MoneyTrack, we focus on the process of investing rather than just on the products. Our goal is to get you thinking about your own investing approach.
For instance, are you a buy and hold kind of person? Or maybe you're the type who likes to roll the dice and you just want to skip the lecture on the merits of long-term investing. Or maybe you want to turn the whole investing thing over to somebody else to do for you.
Everybody has different levels of experience when it comes to the stock market, but we can learn something from watching how other people invest, especially when they do what actually works. And that's what we're here to do today.
Anyway, it's a kick back and learn kind of environment here. Pam's dog Chloe is always in the mix. She's in and out. She's a free-range Labradoodle.
All right, we have a very special half hour ahead of us, so let's get going.
We do. Every season on MoneyTrack, we go out and we find an ordinary investor whose story is extraordinary. It is so amazing that you can't help but come away totally inspired.
Now, last season, you might remember it was Earl Crawley, the parking lot attendant from Baltimore, who never earned more than $20,000 a year, but managed to invest his way to financial security.
And what Earl did right was to stick to the basics of investing. Pretty powerful. And by the way, in case you're wondering, Earl Crawley's portfolio hasn't suffered much at all since we first introduced him on our show.
In fact, Earl's continued to keep his investing priorities straight. For him, it's the return of his money that's more important than the return on his money. So happy to report Earl's still investing slow and steady.
So our inspirational investor for this season is once again living proof that patience is an essential ingredient to successful investing.
And you won't forget this one woman's story, her very unique approach to investing. And after you see this story, we're going to talk about her simple style with one of the most celebrated and respected stock experts in the world.
So what can listen carefully, 101-year-old woman teach us about investing? Let's head out to Fort Worth, Texas and find out.
I don't feel any different than I did when I was 20. The brain never ages, I don't think. Now my body, I'm shocked.
Meet Lyndall Scott Russell. This self-proclaimed little Texas country girl is 101 years old. But you won't notice her age, just her attitude.
When they ask me what's the biggest changes in our bosom, during the 20s, the flappers, we had to wear bras so flat, you couldn't breathe.
Who's that?
That's when I got married.
Much of her life has been consumed with two great loves, and to each she vowed to stay true, a promise she kept. For more than 53 years, her naval officer husband, Rusty, was her best friend and trusted companion.
We made every minute count.
But there was another, more hidden affair, with a bond every bit as strong as her marriage.
That's very personal. Why would I tell people?
She's talking about a company. Their relationship began innocently enough. but blossomed over time and turned Lyndall into the largest single shareholder at Safeco Insurance.
See your local professional Safeco agent.
In 1907, Lyndall was born on a farm in Sherman, Texas, one of 6 kids. They were all raised to be independent, so much so that Lyndall got herself kicked out of college for having a bad attitude.
So I was a loose woman. I wore my dresses too short.
She ended up graduating in 1932 with a degree in economics, marrying her officer and a gentleman's sweetheart, Rusty, 3 years later.
I've had the most wonderful life. I could live it over except World War II.
Stocks were the furthest thing from her mind as the war ended. But Lyndall, 43 years old, was about to be set up on a blind date with destiny.
See? General takes care of everything.
The General Insurance Company of America got its start in Seattle in 1923 as a fire insurance company. In the 1950s, the General created a subsidiary, the Selective Auto and Fire Insurance Company of America, or Safeco. Lyndall and Ellen, their 7-year-old daughter, were living in Seattle, missing Rusty, when she decided the time had come to invest. She went to dinner with an old friend, an insurance agent, and posed a question to him.
I said, I have a little money. I'd like to invest in stock market. And I said, do you know anything about it? And he said, no, I don't have any money.
But a week later, he called with an idea. He said there were 30 shares of Safeco stock for sale. His boss was borrowing money to buy half of them. The other 15 were up for grabs.
I hung up, got to thinking if it'd be good for him, why wouldn't it be good for me?
She bought the shares for $315.
They sent me the share the certificate then, and I had no bank box or anything, so I just found a nice shoebox and put it up on the shelf.
Over the next 58 years, her constant companion, Safeco, would split a whopping 11 times and turn this country gal into a multi-millionaire.
Well, I've considered it my savings, and I had faith in the company, and I just stood by them. Brokers told me over and over, you have too much in that. I said, I don't care. Maybe I have, but I'm not selling.
That was the biggest mistake I probably ever made with Miss Russell, and that was suggesting that she sell some of her Safeco to diversify the portfolio.
What made you hold on to it?
Well, we had to going to retire someday, and I was interested in investing and making money. To me, money is a tool. You invest and you leave it.
In 1957, Rusty was temporarily transferred to Fort Worth, and they bought a house, the same house Lyndall still lives in. But Rusty was done with moving around.
He came home and he said, we've retired.
They lived off savings, Rusty's retirement, Social Security, and never touched the Safeco dividends. Lyndall credits the Depression with teaching her generation to save for old age. It made her fiscally conservative. Some might even say tight. Are you offended by that?
No. I am generous with people, but I am not wasteful or extravagant.
Lyndall passed the $1 million mark in paper value well over a decade ago. So how many shares did she end up with?
33,346 shares.
Not too shabby for a $315 investment she kept in a shoebox. But by the spring of 2008, Lyndall's luck and love had run out. Her beloved Rusty had been gone for 20 years. And now her adored Safeco was leaving her too.
It was an emotional thing for her.
Safeco was sold to Liberty Mutual Group for $6.2 billion, providing a gracious parting gift to its most ardent supporter.
And Uncle Sam nearly killed me because I hadn't paid anything back in the growth in the 58 years.
As she approaches 102, it's clear Lyndall's most enduring love affair is with life itself. And she has some sage advice for the rest of us.
Most of us forget the most beautiful things of our lives each day. We should stop and pause just a few minutes and say thanks for the sunshine.
And thank you, Lyndall, for your sunshine. I love everything about this woman.
What's not to love? She gets kicked out of college for having a seriously bad attitude. Her skirts are too short. I'd be interested in hearing the story she can't share on the show.
You know, her original $315 investment, today, in today's dollars, that's really $3,800. Wow. So, back then, I guarantee you that money was pretty important to her.
Now, I have a MoneyTrack quiz question for all of you. Which publicly traded U.S. company would have made you the most money if you'd bought it from the day it began trading? Your choices are A, Coca-Cola, B, Procter & Gamble, C, Philip Morris, or D, General Insurance Company, Lyndall Stock. Now, we promise we will give you the answer later on in the show.
Now, right now, we want to hear from one of the most respected investing experts on the planet. He's also the author of this best-selling book, Stocks for the Long Run, The Definitive Guide. Pretty appropriate here. And it's only one of several best-selling books about investing that he's written.
Dr. Jeremy Siegel's also a professor of finance at the Wharton School of Business at the University of Pennsylvania.
And today, he is our MoneyTrack Investing 101 professor right here, right now. Welcome, Jeremy.
Jeremy, as an ordinary investor, just like any one of us, what did our favorite country gal, Lyndall, do that was so right? It turned her into a multi-millionaire.
Pam and Jack, it's great to be here. This is what Lyndall did right, and that is she did not panic when the market was down. She stayed with her stocks. She reinvested her dividends, and those two factors, sticking with the long-term plan, is what enabled her to do so well in the market.
Okay, well, dividend reinvestment has been the magic ingredient for Lyndall. So obviously, this is pretty powerful.
Dividend reinvestment is a wonderful way to build long-term wealth. You specify either with the company or your brokerage to take your dividends and buy more stock. And one of the beauties of that is that when the stock market is down, those dividends buy more shares. So you actually buy more when the stock is down. When it's temporarily high, you'll buy less shares. And that's exactly the right strategy that you should pursue. Buying more stock when it's low, buying less stock when it's high, but continuing to reinvest in the market at all times.
How does dividend reinvestment really work? Can you break that down for us?
The great thing about dividend reinvestment, it does it automatically. You don't have to judge, well, is the market low now? I'm going to put more in. That's really hard because it's so discouraging when the market goes down. But the dividend reinvesting automatically buys those more shares when the price is down, and that proves to be a wonderful builder of wealth in the long run.
One big difference, though. Earl, our parking lot attendant, was totally diversified.
Right.
But with Lyndall, now, she could have easily just bought something like U.S. Steel instead of this winning company. Now, Jeremy, none of us, and I think you included, would ever recommend somebody put all of her eggs in one basket and then just sit on that basket.
Lyndall took an awful lot of risk. The longer your horizon, the bigger the percent should be in stocks. But you should own some real estate in the long run. And you should have some bonds for short-term emergencies. If you diversify, the data is so clear that in the long run, it builds such powerful wealth with so much less risk. So she was lucky, but I certainly would not advocate that strategy for the average person.
Okay, then. This just reinforces what we already know, that dividing your investment money very carefully between stocks, real estate, bonds. It's essential. And then beyond that, we know that proper diversification within those stocks is essential. Now, Earl certainly did that. Lyndall did neither.
Right.
So my question to you is, do you believe that time is the real magic ingredient when it comes to investing, sort of the X factor?
Stocks accumulate through the years, but they don't give 20 and 30% every year. Some years they'll give 25, some years they'll go down 15. What we do know is their average is about 10% a year. And that takes about 7 years to double their total sum. So the more time you have, certainly the more likely you will do extraordinarily well in a stock portfolio.
Right, but now tell us why, because I think a lot of people want to know, why not just sell General Insurance when it was high? She could have just sold it high and then bought it back again when the stock was down. What is so all-powerful about just hanging on, in your opinion?
What is interesting is that a lot of people try to do that. They say, oh, the stock is high, and they sell it. And one of two things happens. It either keeps on getting higher because over time stocks generally appreciate, or it does go down. They congratulate themselves, but then they never buy it back. After it goes down, they say, oh boy, I made a good decision here. It hits a bottom, starts moving up, and then all of a sudden it's above the point they sold it at. And then they get discouraged and never buy it again. I've seen that happen a number of times to investors.
And at the end of the day, having that patience seems to be what makes super successful investors rich.
Well, think about Warren Buffett. His favorite holding period is forever.
Right, and you can refer again to our favorite superstar, Earl Crawley, who just held on to those stocks.
Thanks, Jeremy. Hey, I taught Chloe a trick.
Is that right?
You want to see this
Absolutely.
one? Okay, watch this. It involves a ball. Here's the web address where you can find out lots more about Lyndall, her story, and read more from our guest professor, Jeremy Siegel. That was pretty cool.
Look at that. Very nice. Very cute.
Let's be nice and answer that quiz question that we tossed at you earlier.
Right. Remember we asked you which publicly traded U.S. company would have made you the most money if you'd bought it the day it began trading. Remind you of your choices: Coca-Cola, Procter & Gamble, Philip Morris, or General Insurance. And the answer is...
The envelope.
You know what's funny? I just happen to have an envelope.
Oh, Jack.
How about that?
The envelope.
Always ready.
Okay. Ooh. Philip Morris. Cigarettes and Sin.
Right.
Who knew?
Now, I thought it might be that.
Did you?
I did, seriously.
Why?
Well, I did, because if you think back, when I was a kid, everybody smoked. My parents smoked, all their friends smoked. I mean, there was a lot of money in tobacco, and I just naturally thought that that might be the one.
Well, it's really too bad you didn't jump on it back then, isn't it? Could have made a lot of money.
I don't even think I was born yet.
Really?
Yes, really, Pam, and I suggest we change the subject very quickly because I happen to know how old you are.
Got it.
Very good.
We know that Slow and Steady won the race for Lyndall, and that reward for all that patience over those years came in the form of millions of dollars.
But remember that the temptation to make money fast is extremely hard to resist. After all, plenty of people turn a quick profit in the stock market every day.
Real question is, can you learn tips and tricks from expensive weekend seminars or from workbooks that will make you quick cash in the stock market? And can you keep doing it over the years?
I'm making money in the market while I'm teaching, and I will show you how to do that.
My husband and I were looking at TV one night, and we saw this infomercial.
Teach me to trade. It's like a computer crystal ball for picking winning stocks.
There was an opportunity to trade stocks and options.
The Teach Me to Trade system assumes that they know absolutely nothing about the stock market. It's a finely honed educational process, and if you can simply follow steps and follow our principles, you'll make money. It's that simple.
Claudette and William Beamer have been looking for a winning investment strategy, and they liked what they were seeing on these infomercials.
And now in just 20 to 30 minutes a day, I make more than I did in any of my previous careers.
So we went ahead and to the class, and then they told us that we needed to have more training, and we needed to go to a 3-day training session that they had.
The Beamers, retired engineers with successful careers, were confident they could grasp the concepts taught at Teach Me to Trade. Besides, the seminar only cost $199.
How many of you want to learn how to make a living in the market? Okay.
The instructor, Lyndall Wolf, was a captivating speaker.
I said, you know what? I'm going to do what successful people do.
She was dressed very well, and she just told us so many things that just made you feel like, wow, this is what I need to do.
Claudette soon learned that with Teach Me to Trade, to make big money, she'd have to spend big money.
I know that a lot of you are sitting here in sticker shock, but I will not apologize for these prices. Every single one of these classes will make you more money than they will ever cost you.
So the Beamers dove in and bought the premium package. If Linda Wolf could make $100,000 a year trading just minutes a day, why couldn't they?
Linda told us that we needed to read certain books. Well, I've got all the books in there. We read the books. We took the training. We practiced. We've done what we're supposed to do, and the system doesn't work.
Teach Me to Trade's promises of lucrative returns trading stocks was starting to come up empty. The complaints were pouring in, and the FBI stepped up their investigation into Teach Me to Trade. It led to a closer look to claims being made by the company's top earners, Linda Wolf and David Gangler.
I will tell you that I make well over $100,000 a year in the market.
There was no evidence to support Wolf's claim that she made money in the stock market. There was no evidence to support that she made $100,000 in the first year or any year.
And Gangler also bragged, claiming he made hundreds of thousands of dollars for his clients.
$244,000 in 2 weeks. My first year after that, I made $100,000.
What he failed to tell the people in the seminars was not only did he make that much money for those people, he also lost that much money for the same people.
As a result of the FBI's investigation, Linda Wolf and David Gangler were indicted and went to trial. A trial that lasted 1 month, with a jury taking less than 1 day to reach a verdict. Guilty on multiple counts of fraud. So the million-dollar question is, did anyone make big money using the Teach Me to Trade system?
We were not able to find anyone who made any significant income through trading. In fact, most of the students ended up losing all their money.
For the Beamers, who spent upwards of $40,000 on the seminar, the lesson was a hard one to come by.
I don't think there's any way now to get rich quick, and you've got to be careful. Money is, it just goes so easily. You have to be so careful.
You know, Pam, these seminars, these books, they represent a whole philosophy that brings up that old debate, the long run versus the short.
The Lyndall type of investing versus the quick. And we're not going to settle that argument here today, that's for sure. But it's not only about returns, it's about risk. And if you would like to chime in and share your own experiences, whether it be investing or trading stocks, we'd love to hear from you. Just head over to our website at MoneyTrack.org, and guess who will be there to meet you? Chloe.
Well, I think this is a great time to sum up what we've learned today. And why don't you go first, ladies before gentlemen?
Ladies before gentlemen, and maybe age before beauty. Oh.
I consider it experience. All right, let's bring up that little checklist that we like to use at the end of every show. There we go. Number 1, whether you're a believer in stocks for the long haul or get in and get out, you can't forget that Lyndall, who's been around for more than a century, just taught us all that investing is a kind of time machine where patience can really pay off.
And what we learned from Professor Jeremy Siegel is that while a good dose of patience is a good thing, so is proper asset allocation and diversification. You're going to hear that a lot on this show. One stock does not make a successful portfolio. What it makes is a big old gamble.
And lastly, weekend seminars promising tips to make quick cash in the stock market are most likely not a solution for making money investing. Even if you can turn a quick profit in the stock market, can you keep on turning those profits again and again and again over your entire lifetime? That is something to think about.
It is, because by the time you paid to learn all those trading tricks, I don't know, you might have just made more money buying a stock and investing. I don't know, call me crazy. That's, you know what? You don't have to literally call me crazy. And it's time for us to say goodbye, and thank you for watching.
So long, everybody.
We'll see you next time. And by the way, I did not mean to imply that you were older than I am. I know you're sensitive about that.
Not sensitive about it.
You sure?
Yep.
Are you okay? Are you mad?
No.
Hey.
A girl I was in college with a year or so ago said, Lyndall, I'm sorry to say it, old age hadn't improved you a bit.
I'm just a working man. Show up with my lunch pail, punch the clock, I get punched.
I'm afraid you'd get me in jail if I told you everything.
How old do you have to be a cougar?
You're there.
Hi,
Just
I'm
drop
Pam
the R.
Cougar.
Hi, I'm Pam Cougar.
I tell you, you know the difference between a friend and a true friend. A friend will come and get you out of jail. And a true friend will come to the jail, lean up the bar and look in and say, wasn't it fun?